Welcome to Empirix webinar on Death of Personal Service. We have a very interesting webinar for you today, and Empirix part in it is how do you get the technology right and keep it right. We're already seeing a lot of technology in the call centre, but the call centre is now becoming what one customer calls mission control, and that means it has a multiplicity of channels, looking at social media, things like Twitter, Facebook, email, SMS, as well as traditional contact centre. Now, actually keeping it right and getting it right is absolutely essential because it gives your customers confidence in the actual technology and the channel. If they lose that confidence, they'll stop using it altogether. So on this particular seminar, we have two very interesting speakers, plus our co-sponsors, SCS Solutions. The first speaker is Merlin Stone. He's looking at the death of personal service within financial services and really how people are building self-service but not self-service propositions. And he'll be talking more about that in a second. Neil Woodcock also joins us from the customer framework. Neil's going to be looking at social media and how that works for financial services. However, the simple thing that comes across is that it isn't really working for financial services, and that is a problem. So without further ado, let's get on with the seminar. Thank you.
Self-service is a dominant trend in many industries. In the financial services industry, its penetration has been varied. In simple products like banking, e-banking if you like, and insurance, straightforward accounts, it's penetrated quite substantially, but in more complex areas there's a long way to go. There are two reasons for this. One is that the regulators in different countries have been obsessed with the idea of personal advice, despite evidence that this is not done very well. And the other is that customers who serve themselves often end up destroying their own wealth rather than building it. One of the reasons for this is that customers don't really have access to the right advice and coaching that they need in order to change how they make their financial decisions. Today, social media, web technology in general, the always-on aspect of mobile mean that customers can access much better advice, counselling and help in making financial decisions. However, financial services providers haven't really developed a clear self-service proposition for customers that covers all their needs. My own expectation is that this self-service proposition will become a dominant focus of the financial services industry in the next few years, and that financial services providers will invest in the networks and the systems and the software needed to provide this proposition to customers, behaving as they do through social networks, through standard web interfaces, so that customers will make better decisions, implement them better and keep them under review, and in the next few years we won't see what we've seen in the last few years, which is customers very successfully destroying their own wealth.
Social media in financial services is fraught with problems from a regulatory point of view in terms of what you can and can't say about brands, products and services, but also in terms of the culture of financial service companies, particularly around compliance and risk, who aren't comfortable dealing in a 24/7 world where content can spread very quickly. Nevertheless, although most financial service institutions are dabbling in social media, they're not doing anything like the same things that consumer product groups are doing. Primarily for the regulation reasons. But here are four potential opportunities. First of all, we know engagement is important. We know consumer and customer engagement leads to more sales. It leads to better attention, leads to better cross-sell. We know that. Social is a way of engaging with communities and with individuals around interests and hobbies and media that they're used to using. So social media has a role to play in engagement, and financial institutions have got to find their way around that. Secondly, social media can help you as a financial institution identify influencers. So influencers that will have some sort of influence on other people, whether they buy your product, can be identified, permissioned correctly and communicated to in a way that justifies their status as someone that can get more people into your brand franchise or can help people stay in the brand. So influencers are important. Thirdly, I think social media as a service channel is important. We know that most people that complain to financial institutions complain through traditional channels, through call centre or through mail or through email. But an increasing number are complaining outwardly through social media sites. Listening to that, understanding that, interacting where it's appropriate, but even if you don't interact, putting that information together to send to the right person in your company to deal with the particular issue they're talking about is important. So service, it can be a two-way channel. So listening is one. The other thing, of course, is Westpac, for instance, in Australia, tweeted out to their followers around some scam email problem that they had, which was very well received by the Westpac Twitter community. The fourth area, we know that companies with a lot of data, utilities, telcos, financial services, airlines, are moving towards what we call low latency customer management. That is near real-time customer management. Low latency means seeing what's happening with the consumer at the time, dealing with that information, bringing it together and making decisions on how you communicate with them. The social world is 24/7, it's interactive, it uses social containers like Facebook, Twitter, LinkedIn, but also things like Gowalla and Foursquare and Facebook Places where people check in to tell you where they are. Now, getting that information, putting it with profile data and, if you like, SCRM, merging traditional CRM data with the social data world and combining that data to produce real-time or near real-time, contextually relevant, appropriate solutions to the consumer wherever they are is an area which a lot of those companies are trying to get into and where social media can help.
So what we've seen today is trends and opportunity within the marketplace, especially around financial services, and how new social media channels are affecting our customer services environment. We've seen trends in the heavily regularised environment as well that compound that, and opportunities through the new media channels with applications on smartphones and so on. We've also discussed analytical opportunities where we capture the data, analyse that, and interact with our clients based on that information and their physical interaction through the different channels. Of course, what we've also seen, this just adds complexity to the customer journey that we're already managing. We find that a lot of organisations struggle, as it is, to capitalise on the what are soon becoming, or rapidly becoming, traditional channels, email and SMS, adding complexity around the multi-channel with Facebook, Twitter, LinkedIn and so on, just makes that environment even more complex to manage. So we're finding within the marketplace that being able to capitalise on the opportunities presented by the multi-channel means that we need to focus on how we deliver that within the enterprise and onward out into our customers, making sure that the customer service we provide is intellectually linked to the business performance.